Okay, let's begin with segment one in three, two. Hey everybody, welcome back to Make It Last. I am your host, Victor Medina. I'm so happy you can join us this Saturday, January 27th, and I've got to welcome a whole bunch of people here in addition to our listeners, because for the first time, we are simulcasting this show onto video, and in fact, the recording of this show was done on Facebook Live, and so some people were able to watch that as well. So it's kind of interesting for me to branch out in this new area. I don't know that anyone's really going to want to watch 30 minutes worth of me talking. We might chop this up into smaller segments, but if you are the kind of person that is more interested in kind of watching the show as opposed to listening to the show, we're going to give you that opportunity to do that and not miss out. But we're still going to have everything here on the audio. If you're a podcast listener, you're going to be able to do it that way. So really trying to reach this content, as far out as we possibly can. So that's something new and exciting. But I do have to let everybody in on, I guess, a new change coming up, which is that if you're a radio show listener and you tuned in on Saturday morning at 7:30 a.m., I first of all have to say thank you for doing that. And second, I'm not here. I've already pre-recorded this show, in large part because of the number of family obligations that I have and those things that kind of keep me away from Saturday mornings and sitting in a radio station. So now that we're able to do a little bit more with kind of a small studio inside of my office with both recording equipment for audio as well as for video, we're in a position now to kind of pre-record the show and put it out there. So I hope that doesn't tune anybody off, that I'm not sitting there in the morning, but I promise you, I'm already up. I got a 4-year-old and he doesn't sleep in. So he's up, and I've got my coffee. So listen, on the show today, I'm going to cover a number of topics. We've spent the last few weeks covering the issue of tax reform and what that means for retirees. And in fact, I am proud to say that we will have the opportunity to showcase a seminar on this. And so we're going to be hosting it on the campus of the College of New Jersey in Ewing. We're going to be doing it on February 5th. There's going to be 2 times for that. We're going to do it at 2 o'clock in the afternoon and 5 o'clock in the afternoon. And all you have to do to attend is navigate to this website. You're going to go to Trump Tax Reform Talk .eventbrite, that's eventbrite.com. And now we're doing this as a service to our existing clients. So you're going to see some of our clients there. They're going to be our client care program members, people that are on our legal maintenance program, and they are our guests. They don't have to pay anything for attending, as well as our financial services clients. Those people are also going to be showing up and as part of their services, what they receive as being a member of our client family. But if anybody else is interested in doing it, we do need to cover some of the costs for that. We're not being paid otherwise. So there's a very small registration fee for general admission. It's just $11, which I think is a very reasonable amount. The seminar is going to go about an hour and a half, and you're going to have that wide open to questions. So we will be advertising it widely to our network. So if you are interested, I recommend that you go on to the website and register early, because the room does have limited space. And I'm anticipating that, in fact, we're going to see a number of people attend this, because there are so many questions that deal with the Trump tax reform and what that entails for them. And we're going to focus specifically on retirees, because that's the majority of the consumer population that we serve. But we will be covering some of the subjects that are related to corporations and how that bears on them. So again, if you're interested in coming, you go to Trump Tax Reform Talk .eventbrite, that's eventbrite.com, and go ahead and register for that. Again, just takes you through a whole PayPal thing, and once you're on, we'll see you there, and we're looking forward to seeing some of our listeners there. Drop by and say hello if you're the first time meeting me. So that's going to be coming on the Trump tax reform. But in the show today, I did want to talk about something that comes up every year. And so every year there are any number of tax preparation or related to tax prep scams that are out there. And I want to walk you through that because I think it's going to be important for you to know what they are and then kind of learn how to avoid them when you're in those circumstances. And so I want to cover that. I just want to cover a bit of news that came out related to discount brokerages and the way that they work. And so let me tackle that one first. And we're not going to get all the way through the end of this first segment before the break, but when we come back, I'll cover the rest of the discussion on it, and then we'll kind of move forward from there on the tax preparation scam tips to avoid. All right, so if we look at this concept of discount brokerage, that's a big draw for a lot of people. A lot of people have decided that they don't want to be working with the with the traditional brokers, so the Merrill Lynch's and the Morgan Stanleys, and so these large organizations. So they're going to go to a discount broker. And if we think about the discount brokers, they kind of fall into a few categories. They are household names. So they are the people that deal with Schwab and their advisor, Alliance. They are TD Ameritrade, Fidelity, Scottrade. And these places have retail establishments. And what I mean by retail establishments, they essentially have storefronts in major retail thoroughfares for you to go up and visit. In my area, there's a Fidelity right on Route 1. There's a Charles Schwab on Route 31 in Hunterdon County. And so you can see these places where you can show up and walk in as a customer, as somebody who is there, as somebody who's there for just like you were going to a store, like you're going into Lowe's and you're going to buy something. And so the advantages of the discount brokers tend to be that the people there are employees of the company, the advisors that are there are employees of the company, and they will tell you that they don't work on commission. In fact, if you ask them that question, they will affirmatively say that they don't work on commission. And for a lot of people, that is a net win, a net benefit for them, because if you've heard me at all on this show, you've heard me rail about the fact that, part of the problem is the incentivization of people who work in financial services to sell you something because it pays more than something else. And that incentive, the fact that it exists, can lead to conflicted advice, specifically if people do not take a fiduciary pledge, don't take a pledge to essentially work in your best interest. Now, that's been the case for traditional brokerages for a long time. And so one of the advantages of the discount brokerage houses is that they will say that they don't work on commission. In fact, they don't get paid on commission because those people may just be employees. They may be employees who are incapable of receiving commissions by their security licensure. Maybe not, but maybe they're there just without the ability to get it. But many times, contractually, they're prevented from receiving commissions. And so consumers go along pretty comfortable with the idea that the advice that they're getting is not conflicted advice, right? Because if the people aren't working on commissions, then what does it really matter what they're recommending, because they won't get paid differently on it. So naturally, they'll be recommending the thing that is right for you. So all of this being said, you can kind of guess where I'm leading, which is that we got a recent news report, I think it was done by the Wall Street Journal, that went and investigated essentially how their employees do get compensated. And when we come back, I'm going to open your eyes a little bit to the way discount brokerages work and the incentives that they place on their employees, and why you should be as wary of them as you are of any traditional broker. All right? So we'll cover that when we come back from the break. This is Make It Last, and we'll be right back. All right. Welcome back, everybody. So this took a little break there in the middle, and this was a break in the recording for the radio show, and it was kind of amusing that I had to kind of sit here as we were on Facebook Live and doing the video recording going, what do I do in this break? I better make the break really, really fast, because people who are watching the stream, they just want to jump right back into the show. All right, so we are talking initially today about the concept of discount brokerages. and the idea that the people who work for them may be giving you conflicted advice. Now, how is that possible when these people don't work on commissions? Well, the reason why it's possible is because they do get incentivized based on what they sell. This is the very nature of not working with somebody who is independent and working with somebody who is captive. If you work with somebody who is in Fidelity, or if you work with somebody that is with Charles Schwab or TD Ameritrade or any of these other places, they are by definition employees of the company. What does that mean? Well, it means that the company pays for their letterhead and their business card and their office space and many times their insurance, their malpractice insurance. So they cover everything for these individuals as their employees. And that means that as employees, they basically have to do what the company tells them to do. And if the company wants to maximize profits, one of the things that they're going to do is that they're going to go ahead and offer proprietary products. Proprietary products are those products that are exclusive to the company and in which the company has placed an incentive to sell one over the other because it makes more money. Fidelity, in addition to being, I use the term loosely, an advice company, is also in the business of creating funds for you to invest in. And so those funds pay Fidelity more money because of the embedded operating costs that are in the mutual fund. It has an operating cost. That means the overall profit remains with a company like Fidelity if you invest in their funds. Well, to that end, anybody who works for Fidelity has been given the information that says, look, if you sell more of the stuff that we make more money on, we will pay you more. And so while they're not working on the basis of commissions per se, they are working on the basis of essentially getting a bonus. And so I said to you before that this came up, I think, with respect to the Wall Street Journal. This was an article that was in January 10th, and we discovered this about essentially TD Ameritrade. TD Ameritrade, they are being incentivized and to sell more of the things that pay them out more money, and they're being paid a bonus. So if you look at that, what they figured out for, let's say, Fidelity, first of all, they were paid twice as much to recommend things that generate higher annual fees for Fidelity, such as managed accounts, annuities, and other referrals, for recommending that over something else. Twice as much. Okay, and they were interviewing somebody that worked for there from 2011 through 2016, who ended up leaving it because what they concluded, and I'm kind of quoting his words, is that he would say, if I was sitting in front of somebody and there were 20 different ways we could have chosen, and we chose Fidelity's managed accounts, and that's what paid us more, there exists the conflict. And so we're back again in this idea that if you are going to be seeking out financial advice from anyone, you should be working with somebody that is worked to minimize, if not eliminate, the conflicts that exist in the advice that they're giving. And one of the ways that you do that is to work with somebody independent and to work with somebody that's made a fiduciary pledge so that what they're recommending is in fact in your best interest versus something that pays more. In my own firm, we do not accept commissions on the investments that we recommend. If we recommend a mutual fund, that mutual fund in fact is one that doesn't pay commissions at all. And so for that reason, we're pretty clear that that works out to the client's best interest because we're not in a position to be conflicted in the advice that we're giving. And so what can you take away from this? And I think that the general consumer probably approaches the discount brokerages with giving them a bigger halo, because if they're there and they're driving down costs, and if that's part of their mantra, then the advice that they're receiving from those individuals should in fact probably be conflict free. And what you're here to learn is that in fact it's not. It's not conflict free because of the incentives that they're providing for their employees, and not just to do great work, right? Because we could certainly see the benefit of, encouraging employees to do well by clients. But in fact, they're encouraging them to sell the stuff that makes them more money, when in fact, it might not be in the client's best interest. And so if you are working with a discount brokerage, or if you're thinking about working with a discount brokerage, I will tell you that part of what you want to look at is whether or not they're being compensated differently. They may not even have the obligation to tell you whether they're being compensated differently, but it's up to you as a savvy consumer to understand when that's happening so you can avoid it at all costs. Well, look, I have sucked up 2 segments worth going on to this, which means we only have one more segment left to talk about the tax prep scam. But I will tell you, in promising you, this is going to be enough time. It's going to be enough time because we're going to hit these. You're going to be aware of them. You're going to walk away as an educated consumer and somebody that will totally be able to avoid these when you see them coming. So stick with us, because when we come right back on Make It Last, I'm going to talk to you about the top tax preparation scams, those things that IRS is warning you about, so that you can be a super, super savvy Make It Last listener. All right, we'll be right back on Make It Last. Stick right with us. All right, welcome back to Make It Last. We've been talking about discount brokerages and why we should be, look at them with a skeptical eye, because they're not necessarily the conflict-free places that other people are making them out to be, that they're making themselves out to be. There are conflicts that exist, and we have to make sure that we're avoiding them at all costs, because this is our money, and we want to make sure that we're good stewards over that going forward. Now, I promised you in the show we're going to talk about the top tax preparation tips. If I do that 5 times fast, I think I'm going to get my tongue in a knot. But we are aware that these things exist, and more, the tax preparation stuff is trying to consolidate information. And if I'm going to give you a few tips, they kind of go like this. The first is be extremely wary of tax preparation services that are being offered to you for free. Let's boil this down. You can go and watch. I was watching the football game this weekend, and I will have to confess that my team is the New England Patriots. Very excited that they're going to be in the Super Bowl again. So I was watching the game, and there were at least 3 different companies advertising that their tax preparation services were costing $0. Now, the advertising to be on that football game is not 0. All right, can we start with that? So it means that they're making money somewhere else. How are they making money? Well, they're making money one of 2 ways. The first way is in collecting your information and selling it. Okay? So I've talked about this last year. I'm telling you about it now. You trade away privacy when you give them this information, and it's buried. It's buried in their terms of service that you are never, ever, ever going to read. There's another report that came out recently about Ancestry.com. A lot of people submitting their DNA to learn about whether or not they are, I don't know, what makes up their genetic background. In the terms of service, you give over complete rights to your DNA to Ancestry.com, which means that they can resell it, do anything they want with it, mapping, yada, yada. Right? This is the biggest scam out there, because most reports show that even what they come back with is not any really hard science. It's not hard science. Anyway, tax preparation services are either selling your information, which is definitely one of the things that they'll be doing, or They're selling to you additional services and products as a way to generate revenue. Remember, the commercial at the football game is not free, and they're running it all the time. They're going to run it from January all the way through April. Excuse me. So they're going to be running it for a long time. It's going to be really expensive. How are they going to make up that money? Well, they're going to make up the money by selling you additional services. Many times they're selling you those services in the financial services field. They're going to sell you a credit card you got to open up. They're going to sell you an investment. They're going to sell you something that you think that you need, or that they're going to recommend that you need based on reviewing the information that they see in the tax return. So we definitely want to avoid that if we can. So I don't believe that you should pay zero for your tax preparation. In fact, you should probably be working with somebody who is a tax preparer. Even with that, there are a couple of additional scams that you have to be wary of. The first is there are some unscrupulous preparers. Right? Now, the vast majority of tax professionals are honest and they provide quality service. But every once in a while, if it sounds too good to be true, it probably is, and you should be wary of tax preparers that are new in town, that are promising you the world, because these are the people that are perpetrating fraud in preparing the tax return. Okay, should also be on the lookout for things like fake charities, and if the preparer's promising outlandish refunds, offshore shelters. Look, you're smart enough now to realize there is no such thing as a free lunch. So be wary of anybody that's promising you the world. Few other things that come up from time to time, and the biggest one is identity theft. Because while the IRS continues to crack down and aggressively pursue criminals that file fraudulent returns using somebody else's social security number, they're making progress on that front. Taxpayers still need to be extremely cautious. Now, one of the things you can do, by the way, is there's often a race to the IRS. The way that you figure out that there's been some sort of identity theft is that you try to file your return and somebody else has already filed it using your social security number. And because they've used your social security number, then it comes up, hey, two people trying to file the same return. So filing your return a little earlier in the season is definitely a way that you can avoid this identity theft. Similarly, there are people that are contacting folks trying to talk about either a threat or the announcement of the return. They're basically impersonating someone from the IRS, either as their agent or something else. You got to be wary of that, right? Definitely do not take any information regarding the IRS from the phone. All right? Anything that the IRS is going to talk to you about, not only going to send you a letter, it's going to be certified mail. Right? And then you can contact the IRS. You call them to try to figure out what's going on. Right? And that phone scam happens. And then lastly, here I am doing a show. The show is now going to be a video show. Everything is up on the internet. And one of the things that we tend to trust the most has to be email and stuff on Facebook. Well, you got to watch out for that. All right. If there's anybody that is, purporting to be somebody from the IRS, they're not going to be asking you for your information on an email. They're not going to ask you to go to visit a website to fill something out. Right. That's not how they operate. But it can be very convincing. These folks have spent a lot of time, essentially trying to figure out how to get you to give up your information so they can go and do bad stuff with it. So let's summarize, right? If you hadn't taken out the notepad, this is the time. What you want to do is make sure that you're not working with a zero-cost tax preparer, because you, as a smart, make-it-last listener, are not willing to trade your privacy for a free lunch. Right? You're going to maintain your privacy, and you don't want to be subjected to further sales tactics on that. So no zero preparation. We're also not going to go with the fly-by-night person that's promising outlandish returns. We're going to be wary of any kind of like fraudster, trickster people go with somebody reputable. In fact, you should probably be asking your lawyer or your financial advisor for a recommendation because they tend to vet those people out. Be careful about identity theft, specifically in filing multiple returns. Get your return there a little bit early. And watch out for scams. Scams on the phone, scams on the internet, scams coming in an email. Do not trust anything that isn't coming by certified mail from the IRS or that you didn't contact the IRS on your own with the questions that you had. If you follow these, you're going to be ahead of the game from like 95% of the people, maybe even 99% of the people. And I have to tell you, I'm completely making that number up. I have no idea. But you will be ahead of most of the people that didn't listen to the show and couldn't figure it out at all. All right, so we're kind of done for this show for today. I want to thank you for joining us. I want to thank the folks that are on Facebook Live that have joined us for the recording of this, as well as those people that are now subscribed to the YouTube channel. And again, if you are interested in doing that, you just do a search for Make It Last, and you're going to be able to find essentially all of our video and audio recordings. You can subscribe on podcasts. We've got 1,000 different ways for you to get this content down and learn the way that you learn best. And so if that ends up being something that is on video, great. If it's audio, fantastic. And then finally, I'm going to leave you with this. If you're interested in learning more about the Trump tax reform, we're doing a talk, and you can register for that talk. It's just $11 for you to do that. It just covers the cost of the room and the cookies there. And so you go to TrumpTaxReformTalk.eventbrite, EVENTBRITE.com, and that'll get you there on February 5th, either at 2 or 5 p.m. at the College of New Jersey. Otherwise, come early, find some parking, because it is a college campus, and you know what that can be like. All right, so that's it for today's show. I want to thank you for joining us, and we will be back next Saturday with a new episode, again, in all of these different formats. Thanks. This has been Make It Last, where we help you keep your legal ducks in a row and your financial nest egg secure. Bye-bye.